Hello and welcome to Morning Markets. Today we're going to be focusing on the key events for the week ahead. This week will be very busy in terms of economic data. Most importantly will be the inflation data that we get from the US and the UK. For global investors, the focus will be on the US inflation report that comes out on Tuesday. In recent weeks, we've seen in the US economy has remained robust. We've seen labour markets remain really firm, and we've also seen business activity expand at a faster pace. And that has really meant that the interest rate cuts that had just a few weeks ago, the expectation of the first US interest rate cut to come through in March, that's been pushed out, and higher probability coming in May, but also the number of interest rate cuts expected this year has been lowered given the strength of the US labour markets and the economy. The most important factor, however, will be the inflation in terms of determining where interest rates will get to this year and when the first cut will come. The Federal Reserve, the US Central Bank, has been talking about that they need to see more evidence of inflation trending towards their 2% target. And so this will be an important report to watch out for. Expectations are for inflation to moderate further, for the headline reading to fall from 3.4% down to 2.9%, and for their core inflation, so that removes volatile components such as food and energy, that's also expected to moderate from 3.9% to 3.7%. Now, the January inflation report can often be quite volatile because businesses come into the year and reset prices for the year ahead. In terms of the UK, they'll get their inflation report as well. Expectations are for a marginal increase in inflation from 4% to 4.1%. It will only be until the next month and the month after where we see a noticeable drop in inflation again due to base effects. It'd be important to look out for the services inflation component. That remains very high at around 6%, which is meaning that inflation hasn't been falling as fast as some other regions in the developed markets. We'll also get a bulk of labour market data on Tuesday. Unemployment, like the US, has been very low, and that's despite interest rates being higher mortgage rates, and just higher prices in general. Unemployment has remained firm, which is good. It keeps people in work, keeps them earning, and allows them to spend. However, it has meant that private wage growth has remained elevated and does risk inflation being stickier for longer. So a lot of important data in terms of thinking about where interest rates may go in the year ahead. We'll also get economic growth from the UK. So we'll get UK GDP on Thursday. The UK economy has been stagnating in recent quarters. So in the third quarter of last year, we saw minus 0.1% for UK GDP. For the fourth quarter, we're expecting zero growth. So any downside misses on the growth front would suggest that the Bank of England may have to cut interest rates sooner, despite inflation not being at the 2% target yet. That's all from us today. Thank you for watching, and we'll see you tomorrow.